Welcome, folks, to Half of the Money Masters. Of course, we're both training this morning. You've got several hundred folks I know that signed up for the class that Tom is teaching today by joining us on our Tiger Dollar promotion campaign. Don't know how many folks are able to watch that live, but you got Tom in one office doing the training, doing some mastery training. He is doing that session all day today, so I'm here with you for this hour as well, flying solo, but I've got you as the co-pilot with me. You can always give me a call at 877-927-6648. And then following the show today, we've got Kate Stalter. We're going to go all the way out to, we're going to fly out to Santa Fe, New Mexico. We should do that in our balloon. Got to get one of those Fifth Dimension songs up there leading into since there's so much balloon flying out in New Mexico. So got to get Al to warm her up with that Fifth Dimension song. And then after that, filling in for Larry today, we got none other than Basil Chapman. He is going to be hitting the home run, so stay tuned. Great programming. Then from what we've got from playing the warm-up group for the Tom O'Brien Show, and he's going to need a warm-up group after doing a full 8-9 hours today with the Master Trader Series, the online Master Trader Series program that he's doing. The warm-up band is going to be Ken Shreve. So thanks so much for tuning in. Right now, you've got the Dow trading off 48 points, S&P's down 8, Composite off 13, small caps down 6, small caps leading the charge on the way down off 3/4 of a point. Apple taking just a little bit of a chunk out of Apple, trading off $2.78 out at $6.15 right now. Our call number is 877-927-6648. You got some nice little sacred geometry that happened as we were going off the air on the 30-minute ES Mini. And I do want to be able to teach you the importance of our Fibonacci expansion and retracement numbers. Expansion numbers being 1.272, 1.618. I've got this great little tool on the software here called Pesavento Patterns, named after Larry Pesavento, of course. And what is beauty about this is it helps automatically to go ahead and measure the expansions and contractions, retracements in between swing points so that you can see that sacred geometry as it occurs, coming off of the low here on the 30-minute chart on the ES Mini, coming all the way back to the 10:30 time frame on March the 23rd. Seems so long ago. 0.786 area is what was hit as we were coming off the air for my show, the Trader's Edge show, that ended at 10 o'clock, and that was a 0.786 retracement, and at the same time was making a 1.272 expansion off of the swing point that was put in at 2:30 yesterday, just prior to a bullish engulfing candle. That area has been taken out. You're going to have to watch how this area holds here, but you've got some nice sacred geometry right there, so it is acting as it should right now as a support level. Let's continue. If you want to know what happened around the world, that's pretty easy around the world, folks. You have the DAX right now is trading off 119 points. So let's go take a look at the DAX, see what that is doing out here. That is below its B point, I am sure, and it's doing it with a fairly wide range bar. The B point on the DAX is on March 23rd. It's completed an A to B equals C to D. That A point starting out here on the 16th of March when it was up at 71.94, made its way all the way down into the March 23rd time frame, and the low there, 69.08. Moves up here, gets close to it, tests out the swing point for March 16th, rejects that area, makes its way, move down, just a normal breathing pattern. The DAX wants to trade down to 67.90. That would be a 1 to 1.272 expansion of that A to B equals C to D. Let's also take a look at the FTSE. Let's go see what they're doing over in London. You can see that also taking out a swing point today, trading out. It's not closed. I don't think that the FTSE closes until, let's see, it's either 11:30. It must be 12:30 today since we moved forward. We went on daylight savings time. So I believe it is 12:30 when the FTSE is going to close. Right now it is below its it's been really trading in a consolidation range. It's below what is interesting here about the FTSE is it is below the February 3rd area. If we go take a look at our markets, which we will, we'll go take a look at our ETFs, and we'll take a look at the February 3rd. That's going to be one of the areas that we benchmark. Why? And even though it's not a swing point here, it is an area where our markets broke here in the U.S. You'll see that as we move over to the ETFs. But in taking a look at the FTSE, while it has been doing nothing more than traveling sideways since February 3rd, and we're already at March the 29th, so it's been doing that almost for 2 months. once you are now trading below that area. It's really trading into the swing point here, which goes back to, because the swing point on this would be actually January 30th. The high out there, 57.33. You're trading out at 57.44. You got down to so far today, intraday, 57.34.11, and again 57.33.25 is the high of that swing point out there. 877-927-6648. Let's go ahead. Let's switch over to our ETFs. Let's go take a spin around and see what we're looking at there. So let's go take a look at strength, right? Let's go take a look and see what the Qs are doing, and that is regardless of what Apple is doing. We'll take a look at Apple, see what, we'll put that on the 10-minute chart, the intraday chart, see what's happening there. But on the Qs, just to give you an idea, we were looking at the FTSE, right? And if I go back to February 3rd on the Qs, here's where I have to go all the way back to. February 3rd, all the way down to the Qs were trading. It broke out on the 2nd to the 3rd. That's when we got some employment numbers or something. But I do know that we did have a breakout, at least a gap up on the Qs and everything else. And February 3rd, the price point on the Qs, if you're going to benchmark that to the FTSE, what you're looking at, folks, is around the 61.68. You're trading out at 67.80. You talk about being able to identify strength versus weakness. We'll take a look at the strength there. And now what the Qs are trying to do is to set up a new A to B equals CD pattern. That ABCD coming off of the March 6th time frame. That low being 63.23. Your B point on the Qs didn't give you much of a pullback, but the B point would be March 21st. And all it did was it pulled back for 2 trading sessions into the low of March the 23rd, down at 66.56. That B point was taken out with volume. The B point, March 21st, the high 67.49, 39 million shares. Well, it got taken out with a gap up and slightly higher volume, 40 million shares. That area here is tried to be tested yesterday. The high of 67.49. All you were able to do yesterday is get down to a low of 67.54. So you were 5 pennies away from that. This morning, you still haven't been able to get that low. You've gotten down to 67.57, trading out at 67.80 right now. That 1-to-1 A to B equals C to D, folks, takes you into $70.62. So that's the Qs. That's what the strength. And this market will not move down until the Qs decide to participate in that. And before we go take a look at the other ETFs, why don't we go see what kind of bite is being taken out of Apple. So let's put the Apple chart up here on the screen. The apple doesn't fall far from the tree, and the Qs are not going to fall very far without Apple falling. So we've got to go take a look at Apple. That's pretty smooth, wasn't it? So let's take a look at Apple here. And Apple not doing much when we take a look at the daily chart. So let's go and put this on a 10-minute chart here and see what we have going on the 10-minute chart. So on the 10-minute chart, we had a low yesterday at 12:10 in the afternoon on 1.5 million shares. Apple moved down to a low of 610.31. That was on 1.5 million shares. Let's just take the line here, draw it across the board so we can pay attention. What did Apple do? And let's take the line tool so we can take a look at price. We're going to take a look at what Apple did at the open. Apple at the open, gap down, and we're going to talk about this being a small gap, but does gap down. Nonetheless, gaps down with 1.57 million shares. At 1.57 going against 1.56, so we're even Steven on the volume, and it can't get down to that price point. Moves up, but it's moving up with what? Take a look at this volume line down here. This is live coming into the 10-minute session. You can see volume, no real volume on the way up, no real volume on the way down, and Apple at the 630 area, which it got up to 621.45 yesterday. I believe Tom and I were calculating a 1-to-1 A to B equals C to D on this, and let me refresh this screen here because it looks like, maybe what I've got here is some intraday. Some pre-market. Let's see. There we go. That's a better looking chart. Okay, now we're talking. And so when we take a look at the swing point on Apple yesterday, we were probably looking right here at the 1520 area where it had 466,000 shares, and you got up above that yesterday morning on the open with 1.9 million shares. So Apple right now giving you no real signal of weakness other than people just taking some profits, but not any institutional selling, that's for sure. And so I would say in this case here, Apple just doing nothing more than trading sideways. So no real clue there, even with the Dow being off 78 points right now. So with the Dow being off 78 points right now, let's go take a look at the diamonds. Let's go see what the diamonds are telling us. And it's the DIA on the ETS. We'll take a look at the daily structure first. Again, like the FTSE, let's just go back and find February 3rd on this. We'll go ahead and draw a line. February 3rd on the diamonds takes us right here. You can see you're trading well above that. Let me just put the low on there. The low of that February 3rd area, folks, is 127.83. You're trading out right now 130.26. And let's take a look at, let's just go down to an intraday chart here. I'm going to go down to the 5-minute chart. Let's take a look at any volume here on the way down. And so if we take a look at, let me update this chart as well and make sure that I've got current data that we're looking at. So we take a look at the diamonds here. So the diamonds this morning gapped down with 111,000 shares. You're trading below that price right now. Let's take a look at that. Let's go ahead and benchmark this so we can put a volume line. We can draw some lines in the sand here, see what it's actually doing. You're trading right at that level. As a matter of fact, when I say at that level, the low of the gap down on that 5-minute chart. And let's see what we're looking at from a volume standpoint. So you gap down in the first 5 minutes with 111,000 shares. You test that area with 125,000 shares. Says that it's not done testing. Right now you're breaking through that area with 139,000 shares. So it's got enough volume right here. Now this 5-minute session is over in a minute or less, just like this segment here, which is over in about another 10 seconds or so. So we get back, we can go take a look at these markets or anything else that you'd like. You just got to give me a call at 877-927-6648. Dow off 74, S&P's off 11. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Show, folks. I'm your host, Steve Rhodes. Your happier host, Steve Rhodes. Tom is doing the Master Trader course. That is for those folks that either signed up for my Master Trader Series course or bought some Tiger dollars. And if you'd like to still get that course that Tom is doing, it is going to be archived. You can do that by signing up for my Master Trader course. The next one is going to be in Tampa here on the 13th and 14th of April. That's a Friday and Saturday. Also on the 27th and 28th up in Boston. And if you think you're sitting on the fence or you're just trying to understand whether or not you think that it would be worthwhile of your time, because it's really the best of, folks. So if you're looking to get the best of Tom O'Brien, the best of Larry Pesavento, the best of Anthony Robbins, the best of Steve Rhodes, that's what you would be getting by attending that course. And yes, I take all the risk. You get all the benefits. You don't have to determine whether or not, if you don't think you got out of it what you want, we'll give you all of your money back. But more importantly, if you're sitting on the fence, just simply send me an email. I will get you the emails of those folks that attended in Denver. Why don't you hear from fellow students what they thought of the course, what they got out of it, and then you can make a better decision. And you've got the Dow down 69 points right now. Let's take a look at I've got a request to look at the XLF. So let's go over to one of our spider sectors here and take a look at the XLF. Now we got the XLE that just happened to pop up on the screen here. And you can see the XLE completed a 1 to 1.272. A to B equals CD. Did that this morning, trading out at 70.46. The 1 to 1.272 is actually 70.46. How does that actually work out? How does that work out, folks? And I know how it works out. It works out because you want to absolutely understand these patterns out there. But we're going to go over to the XLF in a minute. Just wanted to make sure that I'm getting the right info here. 70.46, sure enough. Okay, so let's go take a look at the XLF. We can always come back and take a look at the XLE. XLF is the financial sector inside the S&P. You are trading out at 1566 right now. If we take a look at yesterday, you did volume on that of 105 million shares. And with that 105 million, XLF, as it was coming up into its, what you're looking at here on the screen, folks, you're looking at a really beautiful Tiger Gartley pattern. Now, we had a slight failure, and I'm going to say just a slight failure, because when you take a look at this is a textbook. This is one where if Tom were writing the art of the chart right now, we would absolutely put this into there, because when you take a look at just simply outstanding sacred geometry, this one has it all. It's got a 0.786 retracement, and this is a longer term because this is going all the way back to the high of February 18th in 2011. Of course, when I talk about that high, let me put that in perspective. Let's go ahead and pull this out here. See, the high, folks, is really back in May of 2007 when the XLF was trading out at $37. Just to give you an idea of just how weak the financial sector is, but you know that. And so right now you're trading out at $15.65 versus $37 now. When we take a look at the XLF, let's come take a look at our current patterns that we have out here. So coming off of its high swing point that we would take a look at being in that February of 2011, what you'll see is a 0.786 retracement completed on March the 15th. You also had a 1.618 expansion off of the B to C. When you're making a Gartley, what a Gartley pattern is, folks, a Gartley pattern is an AB equals CD pattern. That is, if you've missed a move, let's say you've missed a move on the way down or you've missed a move on the way up. In the case of the XLF, let's say you believe that you had missed a move on the way down. Well, that move that you would have been taking a look at, and the reason why you don't need to chase things, why you want to go ahead and use advanced techniques where you're taking a look at these patterns, because you can draw these patterns ahead of time. You can identify areas where these should complete, and then you can look for a candle, one-day candle. Maybe it's a multiple-day candle configuration to let you know that you should go ahead and pull a trigger. Well, if you're taking a look at believing that you moved the XLF on the way down, well, the way down was going from that February 18th all the way down to the low here on October 4th, 2011, right? Makes sense, October 4th, 2011. Well, if you were looking at a way to be able to play that, what you want to do is you want to find the next A to B equals CD as a retracement on the way up. You could certainly buy, I could teach you about the sacred geometry of a 618 or 786 retracement, but the better pattern is let an AB equals CD pattern form. In this case here, that's what happened. If we draw our AB equals CD in, we'd start off with the low in October 4th, all the way up to the high there on October 28th, come back down to November 25th, and what you'll see is a 1 to 1.272, A to B equals CD, completes at 1574. Well, right at that point as well, you also have on this C to D, this retracement here, this B to C, you've got a 1.618 area. Now, what the XLF did, though, with volume on March 13th, 184 million shares, that is the benchmark for the XLF. It hasn't been able to get down there. Even the volume yesterday, only 105 million shares. The XLF looks like it wants to break this pattern here and actually move higher, folks. 877-927-6648. Dow is off 84 points. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And the other half of the Money Master, he is doing some training this morning. He is doing his online workshop. And so for those of you, I'm sure that are attending, you can't hear me, but I would bet you are having a great time and learning all kinds of information. You got the Dow trading up 89. Let's just follow up on the XLF trade. I just simply dove down into a 10-minute chart. Take a look at what's going on the 10-minute time frame here. And what we're taking a look at is the gap down that occurred at 9:40 on March 22nd. A gap down there with 21 million shares. You're trading into that area right now. You're doing that into that. You're trading into that area on much lighter volume. 2 million shares, 2.2 million shares. 2.8 million shares. We'll have to see. Now, your benchmark on that is going to be 1560 is the low. You're traded out at 1563 right now. Does not look like it has the volume to bust through that area. Also, if we just simply, let's take a look at the ABC patterns that are out here on the XLF on the intraday. What I would do is I would pretty much start our A point right up here at the high at 9:15 on March the 27th. I'd take my low down here at 12 noon yesterday on the 28th, and a 1-to-1 A to B equals C to D would complete out here at about 1557. You're trading at 1562 right now. That would complete the A to B equals C to D. Would also test that swing point at 940 on the 10-minute chart. So you'd like to see it do that, then get back inside that swing point, that low of 1560. Then you would have it all. That is on the XLF. If we just simply take a look at a little bit longer term, meaning a 30-minute chart out there, let's just see what we find on a 30-minute chart as I refresh the screen here. And if I refresh, well, that's a pretty wild candle. But if we just simply go back and take a look at on the 30-minute chart, the 10 a.m. time frame for March the 22nd, where you gap down, you had 32 million shares. You're trading inside that right now, and you are trading inside there with much, much less volume. However, this has a little bit deeper A to B equals C to D pattern. This A point being that 10 o'clock session or 1601 on March the 27th. The B would have been yesterday at noon on the 28th. And the C point being into the close of yesterday, well, maybe it is the same, 1557. But what you are on is the inside track here. So what's important when you're taking a look at ABCs, it's very important to take a look at the inside track or the outside track of the C to D leg. When you're on the inside track, that says you want to do more than a 1-to-1, A to B equals C to D. That would take the XLF into that 1548. That's the 1.272. or the 1537. That's 1.618. The easiest way to then measure it is to take a look at the retracement of what your B to C retracement was. What you can see here is a 0.618 retracement. So 0.618 retracement, this says to me the XLF wants to trade down to that 1548 area. That is on the 30-minute chart. Let's go back and take a look at the XLE. That is the weak sector out there. So let's go see what the weak link, not weakling, but the weak link in the chain is doing out here. And that has completed a 1-to-1 A to B equals C to D. You're trading about 1 to 1.272, trading below that right now. So yesterday, if we take a look at the volume out there, yesterday you did 15 million shares. That 15 million shares coming into 13 million shares. So breaking through that swing point was not that tough. You traded in there with higher volume. Now, the close on January 30th, that's the swing point that I'm looking at on the XLE. Let's take a look at the high on that session is 71.19, 13 million shares. Yesterday, when you closed at 71.17, so 2 pennies below, but you do it on 15 million shares. So when you close inside a swing point, what that says is you want to go test the bottom of it. Well, the bottom of that swing point on January 30th is $70.13. You're trading at $70.19 right now. Again, 13 million. So we have been trading here for an hour and 8 minutes. Volume-wise, we've done 4 million shares. That would say you could do maybe about 26 million shares if you just did the straight line basis. We know that that's not the case, but of course that's going against 13 million. So it's got the juice to actually punch through and penetrate that. That would then take your next move. That would take the XLE down into the 69.12 range. Well, what else do you have at 69.12? Let's just see what kind of where we're at with regard to some sacred geometry right now. Let's put that up on the screen here. So you're at a 0.786 area. Let's go ahead and get rid of that. And let's just do our own. And our own, we're going to first come off of the October 4th area. So we take a look at October 4th. That's going to be the most significant swing point that we've got out here low. And at this stage, our swing point high is going to be February 24th. What you'll see is the 0.382 level is right at the $68 even mark. That is on the XLE. If we go take a look at some other swing points that are of importance to us, one would be November 25th. That's this candle right here. That was the next low as the market had moved up off of October 4th and then moved back down. November 25th was the low out there of 63.83. So if we take a look at a retracement from that swing point up to the top, what we will find is this. We will find that the 0.618 of that area happens to be right in the same range of that 0.382 retracement. So now we've got $68 as one area. That $68 was the 0.382 off of October 4th. I'm just going to write this down. You then have 68.67, because I'm going to erase this as well. So 68.67 happens to be the 0.618, and that's off of November 25th. So just to clean this up here a bit, and then we'll come back and see what that says. So, your next real swing point, which is going to be very close to that November 25th low, but I'll go ahead and draw that in there. And that is off of December 19th. That December 19th low to the high on February 24th, 618 being 69. Let me make sure. 69.27. So you got 69.27. And that's going to be your 618 off of that area. 618. Now let's take a look at, we're just dissecting now. That's going to be a move of a swing point right here from January 30th. Coming in at that same area, that low there being 70.13. I'm going to write that. Move. It's a 100%er. And then what other swing point would we have out there? Well, we've got this swing point here, which was the B on March the 6th. March the 6th, that's important. So let's take a look at the expansions off of that swing point and see what we have. So the expansions off that swing point at, the 1.618, we've blown through that at 70.79. Let's go ahead and let's take our next, let me pull this up here and I'm going to adjust this, because your next set of expansion would be 2.618. So we're going to go ahead and draw that in here right now. 2.618, we'll see what that number is. That number being, let me put a line up here, just make it a little bit easier. How about that on the fly? We're using this tool. And let's just put this in here. I'm going to go ahead and save this, I believe. That way we have that in there, percentage. Use this as a default. Okay, so the 2.618 would take you down to 69.12. Okay, how do you like that? That's a beauty. So what we have number-wise lining up when we take a look at some sacred geometry that's out there, you are in the range of $68 to basically $70.13. That's your two-point swing. But everything seems to be coming together right in the 69 range. Well, between 68 and 70, how about that? So 69, and you are trading at 70.25. When you get to that $69 area, that is where the XLE should find some support when you just simply take a look at expansions and retracements off of swing points. And you want to be able to do that on anything that you're trading, because oftentimes those areas will absolutely hold. So let's go all the way up to Chicagoland, and let's go to our man Robert, who called in. Robert, thanks for calling. Thanks for holding.
Hey, Steve. Thanks for taking my call.
My pleasure. How are you today?
Very good.
That's good. And how are things in Chicago? It's summertime now, right? You guys didn't have a winter, did you?
Not really. It's pretty amazing compared to last year when they closed down Lakeshore Drive.
Yeah. Now, what problems does that present? I mean, did you guys have much snow up there?
No, we got a little bit in December and January, but we really didn't have a winter, not like we're used to.
Yeah. Now, does that present any problems, water-wise or anything by not having any kind of snow or snow melt or anything like that? Or you guys don't have to worry about it? You have all the water imported from France.
Well, yeah, we have Lake Michigan, so it's not a problem. We just get out to the golf course a lot earlier.
Oh, is that it? Okay, all right, great. And you wanted to look at Mako Surgical, M-A-K-O is the ticker symbol. That's trading down $1.02 today out at 40.96. And tell me what you're doing and how I can help you here.
Yeah, so, Steve, I'm long since around 25 in January, so that's type of the way I trade it. So I'm long it. I'd like to stay long. Actually, this is one of those stocks that took off early January, and I was wondering if I can add more, or should I add more on a pullback here?
Okay, so we're taking a look at Mako. Let's see what patterns are present with inside the stock, and you're at the $25 level, so nice move there because you're trading out at $40.90 right now. And as it came off of the top here, it gave you an indication that it wanted to pull back. That pullback was the candle that was formed on March 27th. That was a bearish engulfing candle. And that candle there engulfed the entire body of the prior session on March the 26th. The high, the close on March 26th was $44.98. When you open on the 27th, you open at $45. So you opened up 2 pennies just above it. And the close of the 27th happens to be $43.75, which engulfs the entire body. So that tells you you're going to start pulling back. So that's a good signal. Yesterday, you moved back with about 1.1 million shares. And what you're trading into right now is where this thing moved up with some volume on March the 20th. So moved up with 3.1 million shares, and you're coming back with 1.1 today. You've done 300,000 shares. That says maybe you're going to do around 1.5 million shares today. And where I would wait as the first test, Robert, is that first test. You should see some type of resistance as you're getting into where it broke out on probably, I would look at the low of March the 16th. I'd be looking at that 37.72 area. And if you can pull back into there on less than 970,000 shares, you might want to take a look at adding there as a spot. But if you are starting to come down with volume, if volume starts accelerating on the way down, then you're going to want to wait to add to the trade, because where this thing could easily come back to, and nothing would really be wrong, is where this broke. And now this might create more pain for you than you really want. But if the area where this thing really has a breakout in the gap is on the January 9th time frame, which is in that $30 area. So that might, I wouldn't want to give up when you're trading at 41. I wouldn't want to give up $15, would you?
No, not really.
Okay, good. All right. So let's just take a look. I mean, not saying it's going to do that, but your first indication is going to be as you come through, this area here where you have some good volume, because you had great volume on March 19th, 2 million shares. You followed it up the next session with 3.1 million shares. Stocks can do anything that they want, as we know. If I just come off of the December 30th area up to the high that was made 3 trading sessions ago, what you'll see is at that 0.786 retracement area, which is nothing wrong with the stock doing that. That gets you all the way back to that breakout. So, for those that, and if we take a look at just simply ABC patterns, I don't know if it completed one here. So I wouldn't get out yet. I'd wait for this thing to give you some more information. So what it did do, though, is if you come off of the low, are you watching us on Tiger TV?
I'm sorry, I'm not.
Okay, no problem. Do you do technical trading, or do you enter your stocks based on some other fundamental analysis?
Some other fundamental analysis.
Okay, so great. So I'll give you the technical piece of it. If you were taking a look at the technical piece of it, you'd go back to December 30th, where it made a low of 25.01. That would be what we call our A point. And we take a look at stocks moving and breathing like an EKG. So the EKG on this would be that low of 25.01, and it moves all the way up into a high on January 26th of 37.90. Then it needs to breathe, and it needs to pull back a bit. And the pullback was nothing really substantial because it pulled back into the price point February 9th of $32. Then it makes, so what we did was the price point of 25.01 up to 37, so that's like a $12, $13 move. You just add that $13 move to the $32 that it pulled back to, and that gets you up to completing at $45. That's exactly what it did. So from a technical standpoint, this stock has behaved exactly like you would want it to from a pattern standpoint. It completes an A to B equals C to D, almost does it on the button because 45.07 would have been the number, and where it got up to on the 27th was 45.15. Tell me how that works. That's beautiful. Then it gives you that signal by making a bearish engulfing candle. Now, when I take a look at this stock as it's made some other highs where it has another bearish engulfing candle, where I would take you to on the technical side, I would take you to October 17th. So if you're going to take a look at a chart and you take a look at October 17th, it also did a bearish engulfing candle, and that's what drove the market on Mako all the way down into that level, that $25 level where you got in. So, what happens from a technical standpoint is oftentimes these patterns, will repeat themselves, and so there is a caution sign out there. But your caution sign is going to be, don't let this thing get below the $37 area, in my opinion.
Great.
Okay?
Thanks very much, Steve.
Hey, you bet, and thanks for calling, and have a great summer up in Chicago.
Okay, bye now.
We'll be right back, folks. 877-927-6648. Let's see, you got the Dow trading off 76.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back as we fly into our last segment here, folks, and thanks so much for joining me. You know, they don't make 2 hours like they used to. It just flies by way too fast these days. And just a quick follow-up before we go to Rich in Orlando, and as we take a look, I use different tools. I use the art of the chart. That's what I actually have up on the screen here right now, and David has put together just some absolutely fantastic software. And so going back to Mako, what I do see on Mako, what I love being able to use this service for, this charting service for, one, it's a scanner tool, and I'm not want to talk about that, but what I really love is that power law vector indicator, because I like to be able to understand over time and as price moves and the proprietary formula that David has created, just to understand the power of the legs. And what I do want to also tell you, Robert, is the power of this last leg, this C to D, even though you're more of a fundamental versus a technical trader. The power, which is 2.8, is the delta number that pops up here on the C to D leg. You want to see that stronger than that A to B leg, and that is not. So just be cautious out there. You've got some nice profits. It completed a pattern. It gave you a candle signal when you go take a look at the candle signals of the past on this chart here, going back to October 17th. This thing can have a mind of its own, and it did one heck of a retracement on the way back. So you wouldn't like to give up those type of profits where you're in at 25 and it's selling at $41 right now. Let's go to Rich in Orlando and take a look at GEL, I believe is what you want to look at. Is that correct, Rich?
Hi, Steve. Yes, thank you.
Absolutely. Tell me, as I'm pulling it up on here, tell me what you're doing and how I can help you, and how's your day today?
My day's doing pretty good. It's a beautiful day in Orlando.
Oh, good. Okay. Are you in this? Are you in this equity? Looking to get into it?
Yes, I did. I bought it when they made the offering. They made an offering here about 5 days ago when that was the big drop that it had and a big volume spike.
So this is going back to March 23rd.
No, actually, the drop I'm talking about was 5 days ago. They made a warrant offering to develop some money for them.
Right. Yes. Came down to a low of $30.46.
Correct.
Yes.
Correct.
Okay. And you got in on that day?
Yeah, 360 is where I'm in, right where it's at right now.
Yes. Okay. So what you don't want to see this thing do is you don't want to see this thing close below $30.46, because if it does, where it will trade to, where it will likely trade to, is going to be the January 24th time frame, which had 1.9 million shares and traded to a level between 27.77 in 28.83. Now, I mean, if you're okay with that, would be about 6 or 7% heat that you would take on this. But this level here, and I'll pull up the intraday. This level of $30.46 ought to hold, but you break below that, and it opens up, sliding all the way down into that $27 area. Now, what I also want to let you know is, this stock is not your most liquid of equities to trade.
Correct.
Yesterday you did 400,000 shares. To me, that's not a lot of shares. You do 97,000 shares on March 9th, 105,000 shares on March 12th. So it may not be as easy to get out of as you might want. I don't know how many shares you have. I'm not asking you. I just simply want to be able to point that out to you because your next real volume day is on July 15th, 2011, when it did 5 million shares. And so, on that day, when it did that kind of volume, what I want you to understand about the pattern of this stock is even though you had a high volume day out there, 5 million shares, it went from that $26 all the way down to a low of $21 on August the 8th. That's why I don't want you to let it get below that high volume from March the 23rd at $30.46. I hope that helps you.
It does. I mean, part of it, my question would have been more on the fundamental side of it, I guess, is the fact that the drop was really more, I don't want to say artificial, but it's because of that offering.
Yeah. Well, do me a favor.
The offering went better off than they apparently anticipated.
Yeah, we're going off the air, but thanks for calling so much. Folks, have a great day. I'll see you tomorrow morning at 9 o'clock, folks.